Hey guys, good morning. It's a Monday. I'm not trading today, but I'm trying to look at the chart to see how I can figure out what's going on. We've had an impulsive move from here. This is our 2025 September, October. The market took out this high. When was this? This was 16th. That was a long time ago. Okay, let's focus on what we are looking. I'm trying to get the directional bias, and I can say that we could say our recent low is this one. This is our recent low because it had an order block and an FEG. You can see this at the daily level. The market is reacting. The market is reacting around this order block. There's another block here that left an FEG. The market came back, is reacting around. Failed, got past the order block and is reacting around this FEG. Now we see an impulsive move. This should be a rejection block because you see the market is totally rejecting. Look at the last daily candle that came right down here. Look at, I'm talking about this candle. Where's my vertical? Look at this candle. Look at this rejection. It came right down here, reacted around where this other block is. This is another block. It can be an order block as well as a rejection block because the market is reacting around here. And now our main focus should be on the directional bias, which means that this is our recent low because here we had this impulsive move after the market had consolidated for a bit. But before then we saw this formation, this pattern. It's the W shape pattern. Guys, let's keep it easy. I know some other people have so many names for this, but I call it a W shape pattern because it's a strong bullish pattern. You see, boom, it moves right here. So okay, so that's one thing we need to know. But for the sake of our directional bias we are dealing with, we'll take our recent low from here because this is presently where the market is reacting. Already here we see that the market came here, rejected around this other block, or you might say a rejection block, got this mitigated, and now the market seems to be reacting around here. Now what we are supposed to look at, we should focus on this 1 2 3 candle. The market got this rejection here, and we saw something like an inverse hammer, although with a very small wick, and then we saw this impulsive move. According to our candle range theory, if the candle is closing within the body, then it's a good go for a trend continuation. But if it's breaking the body of the candle, it means that there might be a change of trend. Now we see this impulsive move. There's an FEG here. I want to buy this market, but I know this is my point of interest. If I'm supposed to take a buy, I call it the area of interest. Okay, this is where I'm supposed to wait for my buyers. Then I want to target this low, so I'll step down to the 4 hours time frame. I'll take a zoom. If you look at where this market is reacting, you see there was an impulsive move that broke out after this choppy movement, and we got here too. We got this and we break out around here. It took out. Okay, the market took out this high here, took out this high, and had this move that took out this high, this other high. The market took out this high. That's a market maker model, and we saw this impulsive move downward. It came back and it reacted around this other block, which is like a rejection block this way. So now what we are waiting to do is to see price come back into our area of interest. The price is making this retracement. I want to get this trade right, but I want the market to come down here to my area of interest. So if I'm seeing this reaction in the lower time frame and I'm seeing a setup to take a trade, then it should be good. So I'm going to set this and just see how it plays out. The market is having a pullback. Normally we need to see what the market is coming back here to do. This way chopping moves and it seems like a retracement. Let me go to the 1 hour time frame to see what's going on. Okay, so this is our area of interest. If you check, we want the market to come and react around here. Where's this thing? Oh shit, what's going on here? Look at something, I can't see the square box. Okay, this is it here. The market will come into this other block that created this impulsive movement, which means that we are waiting to see what the market is going to do here. This is an FVG. It's not even a breaker block. This is an FVG. Whatever chopping movement the market is doing here, trust me guys, the market is going to come here before we can take our trade. We'll go down to a 50-minute time frame to check what we're talking about. If you look at what's happening here, we see that this is just a choppy movement and there's nothing actually happening here. So we want to see the market come down into our area of interest. This is an area of interest. Because from here, this is when this is our last order block here that created this FVG. So we are expecting the market to react at least 50%. This is another block, at least 50% into this other block, because it's quite a huge imbalance. So we are expecting market to come 50% around here. Now it will boil down to the dealing range. You know, with the dealing range, you're supposed to, if you have your buyers and you see a setup, you should know that there's something called the premium and the discount. Premium is when you want to sell at a higher price, and discount is when you want to buy cheap, so you can sell to inform buyers at a higher price. So that's it about the premium discount range, but we'll get into more details as we keep up with this analysis. Yes, I've been trading forex for about 2 years to 3, and maybe my mistakes might be open, but if you're an elderly trader and you come across my stuff and there are any mistakes, we can try to sort this out in the comment section, guys. So here I don't need to do too much. In the 15-minute time frame, I look at my target. My target is here, which means that if the market is going to come down to my point of interest, guys, it's the smart money concept. Recognize the averages, recognize the algorithm, and there's something we always say: the market is always chasing liquidity and rebalancing inefficiencies. That's it. And guys, you need to understand that until I see the market reacting around here before I can get a setup, all what's happening here, it's totally nonsense. There's all this movement. I don't know who is chasing this move, but I don't think it's necessary. Yeah, if you're going for a buys, if you're looking for a great move, I think this is our target here. It should be here, and we'll wait for the market to come into our point of interest, which is this other block at the 4 hours time frame. I think I told you guys this, the higher time frame. It is as easy as that, guys. This is a choppy movement. We want the market to come here. This is our FVG. So we are still looking for the market to come down. And on the daily time frame, you'll see it clearly. you see clearly that we need to wait for the market to balance. We need to wait and see the formation of this candle today, so we know what the market is going to do. Or Monday is not a good trading day. It's not a good trading day. Or what we are going to do wait to see is the market, if it's this candle, this daily candle is going to close above, or it will close within the body of the candle. So we are going to see. I'm not trading today, but I'm on for the analysis, guys. So I don't know, this is my journey. I started creating this content because of educational purpose, and I think my trading strategy has been scientifically tested right. I don't want to get into so much details because it might be for clarity later on. Like I said, I use the ICT, inner circle trader smart money concept. That's when you start hearing the other blocks, the fair value gaps, the market algorithm, delivering liquidity while rebalancing inefficiencies. So guys, I think it's an 11-minute video. It might help somebody that's starting. Always have an area of interest. This is a rejection block. We are seeing the market reacting here. Boom, this is our next target. If the market is supposed to buy, we are supposed to buy into this week, or we take out this week. Yeah, so if we see a reaction here and we buy into this week and there are any inefficiencies, we are going to wait for the imbalance and keep buying until we get here at this point here, because this was the last market maker model where the market sweep liquidity and had a reversal. This was the last time that as our recent market maker model, the market had to sweep liquidity here, then had this move right down here, and the market is reacting around here. So we want to see, we'll be taking this trade maybe on Wednesday, because I want to see a clean setup. I'm putting 2% on this trade. So guys, just stay tuned. I'll be dropping more of this kind of videos. I want you to appreciate my work. I want you to know trading is a gradual journey, and if you're spotting my mistakes, trust me guys, I didn't come here to waste my time and to waste my data in all this. Maybe we can talk about it in the comment section. My name is Jerry King on all my social media platforms. I have my TikTok is Jerry Signals. Yeah, because I could not have two TikTok. I had to go for a monetized account that was not created here in Cameroon. So guys, you can like and comment and give a follow. God bless you. This is Jerry King, and we just do what we love doing. I'm an intraday trader. I'll be getting to swing very soon, and trust me, it's a thing guys. It's a gradual process. There's no rush. I know there are youngsters out there. Forget about the Lamborghinis, forget about the Abbey and other people. Then to focus to grab the skill the right way. We'll have informed information about market analysis. Go for those mentors that are talking about the market and making different videos on how to help your educational and psychological standard. Don't go for the Lamborghinis guys. Do not go for the Lamborghini. It's just going to make you go broke in a very short period of time. Trading is very stressful, and if you approach it the wrong way, it can get you into depression. So stay safe guys, and trade responsibly. Always risk 1 to 2% of your account size. Don't do more than that.